to a good start, thank God. We're off to a decent start in the bank Nifty, off to a decent start even for auto stocks. So Tata Motors DVR, Tata Motors, let's stay with that please. You want to stay with that because that is going to be the most important document. No, now Tata Motors is jumping. That is interesting one. The pre-open rates were different and now Tata Motors DVR is obviously 15-16% higher. So it's a decent start, I would say. L&T, Tata Motors DVR. You're going to look at some of those stocks in terms of the positioning of the stock. Then you want to look at largely numbers where in Indigo, yes, let's not lose sight of Indigo. The news cannot be substantiated in terms of the impact it will have in terms of EPS, but surely if there are going to be more scrutiny and the DGC audit is going to be there, then that means less fleet availability, more fair to more cost impact as far as the ticket pricing is concerned, considering that bulk of the fleet of Indigo is right now using Pratt & Whitney engines.
Yeah, absolutely. So, those are a couple of stocks which are in focus. Let's see what L&T as well is up to. The Q1 numbers, of course, were above the estimates. Order flow was up 57%. And it's a 10,000 crore rupee buyback, the first of its kind from L&T. 3% higher for L&T, nearly 2631 is where that stock is as we speak right now. Tata Motors, of course, like Nikunj already highlighted, that's the other stock in focus. And surprisingly, you're not seeing much of a fall coming in on Interglobe Aviation. A lot of other numbers as well. You've got UTI AMC, the revenue has risen 55.5%. NII uptake of about almost 10% on a sequential basis, a gap up move for UTI. There's Ajmera Realty, blowout set of numbers, net profit higher by 82%. Amber Enterprises, the EBITDA has jumped up 33%, margin rise of 240 odd %. So these are a couple of stocks which are in focus. There's Man Infra, CEAT as well, which has seen a margin improvement for a fourth straight quarter. Triveni Engineering has come out with its numbers. Suntech Realty has come out with good numbers, and the pre-sales value or rather pre-sales sales has ridden about 16%. Collections though have been flat. Suntech holding up 1.5% thereabouts as we speak. On the same hand, you've got some disappointing numbers coming in from Cyient. We're going to be chatting with the management as well. The margins have come in flat, 14.7% on a sequential basis. SBI Life, the VNB margins are below the estimates. So that stock as well must be in the red. SBI Life will just come up for you on your screens. SRF, they expect weakness in the packaging business in medium term. The analysts have cut the revenue estimates. This is, of course, a known story. So a second consecutive day of a fall coming in on that stock, down by about 1%. Let's see where Canfin Homes has settled in at after the fraud estimated around 38.5 odd crore rupees. Canfin Homes, even after the management clarification, stock continues to bleed about almost 7% there. There's Dixon Technologies, and I want to see what Delta Corp is up to. The numbers, of course, have been very good, but unfortunately, the GST demarcation came by only at the fag end of the quarter. So, the quarter gone by, the operational performance is not going to capture the impact henceforth of that 28% GST. We're, of course, going to be chatting with the management as well shortly on what they make of course, the earnings and the impact of this 28% GST. Delta Corp, though, is at 190 thereabouts. So pretty stable, you'd have to say. As is the start for the Nifty as well. At 19,722, it's a marginal uptick coming in. So it's a stable start all in all. But Kunal, how do you think the rest of the day is going to pan out, and what trades are you punching in right now?
Yeah, I think it's a stable start for the index. Again, similar cues, the market is getting in more specific towards certain set of stocks which are riding on the back of news flow, Tata Motors, PEL, L&T, etc. There's initial buzz of activity over there. In terms of the opening trade, I think HUL could actually be a good contra bet at current levels. The stock has fallen by 200 odd points in the last 3 weeks of the July series. It's now come back into an oversold territory. So from a contra perspective, I think at 2570 odd levels, HUL could be a good contra buy.
Okay, watching out for HUL. That's a stock that Kunal is punching in as his first trade. Let's get in a take from you then, Naresh. Flat for the markets. The likes of L&T, Tata Motors, Infi taking leadership. Are any of these one of your first trades?
So going a little contra, Axis Bank, which is a risk reward trade, a stop loss at 945, closer to the support levels, could reverse from here. So expecting a bounce back on Axis Bank.
Well, gentlemen, thanks a lot for that. S. Naren joins us now, Executive Director and CEO with ICICI Prudential AMC. Naren, fantastic to have you back. Thank you for joining us. The fact that you are on our show is making you happy, or the NAV in the market is making you happy and smile so much?
It's I mean, when you're close to all-time high, and the fact that investors with ICICI Prudential have made good money over the years does make you happy. So there is no why should you feel unhappy about it?
Everybody is happy. Is the reason to get slightly worried about the market setup, the macros and the valuations? Do you think the market run-up has been too fast, too quick and too swift?
See, luckily we have a lot of stock, which means that the incremental investors are much smaller than the amount of stock of money that we have. Uh, what happened in the last 6 months was that the macro of India improved very significantly. And last year, same time, we used to worry about crude oil, we used to worry about current account deficit, we used to worry about inflation. I mean, today we don't worry about any of these things. We worry only about valuations, valuations, and valuations. So I think there is room to worry. And the fact is that incremental investors have to worry. But what about people who have been invested with us over the years? They have less to worry because they have made good money. And there is nothing at this point of time which says that they have to take away the money and redeem the money. That's not what the market is suggesting. But people who have to invest incrementally, they have to be a bit more worried rather than the people who have invested over the years.
So Naren, that brings me to my next question. What is looking like the overvalued pocket or pockets in the market right now? And because, temperamentally you've been a contra investor, what's looking undervalued, if there's anything?
Actually, if you look at it at this point of time, there are very few pockets where there is undervaluation or there is fear. And that is the challenge at this point of time for us as investors, because the few areas where you can see that returns are negative or fairly muted at this point of time is technology, where the numbers are coming bad. So that is an area where I believe gradual investment over a period of time should work well, because you can see that there is very low growth being seen in the sector over the last few quarters and maybe over the next few quarters as well. So that is one area where you can see that there is a challenge of growth, and therefore the valuations are continuously dipping. The other areas where you're seeing clearly bad numbers at this point of time are sectors like chemicals. And but there, if you see, the valuations have been so high and very, very high over the years that what has happened is only some level of correction in the recent past. So have we reached the bottom is something, we were actually zero in some of these sector, in a sector like chemical, in many of the sector stocks. So we are still evaluating, have we reached a situation where the sector requires investment, is something we are thinking about. These are some of the few sectors, at least, where you've seen a fair amount of negative news flow. But otherwise, the rest of the sectors are all seeing very positive news flow. And so there is no scope for contrarian buying. The challenge of contrarian selling is India is the best country in the world to invest at this point of time. And while we may think that India is the only country which has done well, you go and look at what's happened to Taiwan, look at what's happened to Japan, what's happened to Korea, what's happened to NASDAQ. You can even look at what's happened to Europe. You'll find that all the countries in the world have delivered huge equity returns in the recent past. So it is not as if India is the only market which has done well. Many of these markets have done well in the recent past. And so it is tough to actually make a call that India is the only performing market at this point of time. So it's a bit challenging from an investor perspective, what to do if you were to take out money, because there are no contrarian opportunities. And if you take out money, that's why I think the biggest challenges is for the new investor, because I think the old investor has to just stay invested.
Naren, hi, morning. Nikunj always says that you need to be lazy and choosy when it comes to the large caps and don't go really wild in the mid caps. But given, the kind of move that we've seen, am I saying it correctly, Nikunj? Yep. Yeah, okay. So what would be your outlook as to how one should be approaching, the broader markets, mid and small caps?
See, the biggest challenge in mid cap and small cap is, when you have one redemption cycle or some kind of a redemption cycle, what happens is some of the froth goes away. And what happened in large caps was, because there was a redemption cycle led by the FIIs in 2021 and 22, the froth went away in large caps. And therefore, all the excesses got corrected. In mid caps and small caps, due to the very effective work done by the mutual fund industry in SIPs, there was no net redemption in mid caps and small caps at all over many years. So froth has just not gone away at all. So what happens is, there is possibly froth in some of the companies. There could be good companies, there could be companies with froth. And that is a challenge when investors are investing in mid cap and small cap. It is only when you have 2-3 months of redemptions in mid cap and small cap, you will know actually whether there is some froth in some of these stocks and whether that has happened. The last time the froth was removed was in 2008, February, March, April. So you're really far away from a redemption cycle in small and mid caps. So, and that is the challenge of investing right now in the small and mid caps at this point of time. So many of the stocks have never seen redemptions, and so there has not been any selling. So stocks move from 30p to 40p to 50p. So that is a challenge. Whereas in large caps, you saw that 2 lakh crores of redemptions by FIs, which are primarily concentrated in large caps. So what happened was, the froth did go away, and you saw many of the new age companies correct under 50%, many of the large caps also correct. So that kind of froth did go away for a period of time, and that ensured, you had much more margin of safety in large caps.
So Naren, banks are a consensus call, but is that the best sector to be in? I mean, it may not be contra, but sometimes you don't have to be contra, you just have to be with the obvious big trend.
Certainly, you should have financials. When you are liking an economy, you should have financials. And that is the thing. But, when you are invested in large caps funds or flexi cap funds, you have a good amount of banks. And there is, at this point of time, banks, we did some analysis over the last 10 years, and we found that banks are the only sector which did not get where valuations haven't gone up. Whereas if you look at most of the other sectors in India, what we found was, over a 10-year period, valuations have gone up by 30 to 40%. That the price to earnings multiples of most of the other sectors in India have gone up by 30 to 40%. So that, from that point of view, valuations are attractive. The challenges in banks is that you have to remember, it's a liberal sector. So it is not a sector which has low debt to equity. So you have to remember that if mistakes happen on the part of any financial services leveraged company, it hurts the equity holder much. And Warren Buffett always says that, when you're investing in financials, you have to be always careful of the quality. And you have to look at whether the company which you're investing in financials is conscious of how they take credit decisions and how they act in the markets. And that is something he has always believed in, that you cannot do contrarian investing in financials and say, I'll bet on somebody who's taking all the risks in financials. And that is how he says it. And that is true always in financials. In financials, betting on quality always works. And even though, we are deemed to be contrarian in the 2016 to 18 cycle, considering that we were managing other people's money, We did not take credit risks beyond a level, and therefore we did not have credit challenges. And we did not bet on many of the NBFCs or the riskier private banks at that point of time, because we felt that there is no point in being contrarian in a leveraged sector like financials. So we still think you have to be, financials are a good sector, but there is no point in taking very big risks in financials.
What should one do in this market if somebody is looking at investing the way you invest? Because barring IT, nothing is cheap, nothing is attractive. And with IT also, Naren, we don't know what AI actually will frankly do.
That part of it is true. That is why I said it's much easier for you to, be invested in hybrid funds, invest in hybrid funds rather than take big bets at this point of time and say that at all-time high, take a big call on equities at this point of time. And that is the challenge at this point of time. That's why I said for all the older investors, it's a very, very easy time to just stay invested because you're sitting and making huge sums of money on your older investments. But it's a very tough time on what to do with new money. And it's not an easy job right now because other than Chinese equity markets, there is no other contrarian equity market anywhere in the world at this point of time. And China has huge structural challenges because of the huge debt level there.
Naren, a lot of mutual funds have stopped accepting lump sum in small cap stocks. Would you be considering something on those lines? Do you see that we've reached that level in small cap stocks?
I mean, it's something that, I think it's something that, our small cap fund is 6,000 crores and, the other, clearly small caps are not cheap at this point of time and neither is mid cap at this point of time. And the flows that we have been getting in our small cap funds are really small. So that is the reason why we have not yet done it, but clearly I don't think small caps are at this point of time something very cheap or it is possibly one of the costliest places in the market at this point of time. And the quantum in terms of our framework, I would say is considering the huge flows which have been coming into small caps, it is a sign that, there is a little bit of more euphoria in small cap and mid cap than it is there in large caps.
Thanks so much for taking time out and sharing with us your outlook on the markets. As things stand, it's about 19,750 levels on the index. But Delta Corp, that's clearly the stock that has been hogging the limelight of late with respect to the GST concerns that saw market cap erosion, results that came out that have been strong. Let's clear the air on the road ahead for the company, what the implications are, the strategy ahead. And joining in right now, we've got Hardik Debar. He's the Group CFO at Delta Corp. Hardik, thank you so much for taking time out and being with us on ET Now. Lots to chat about, but I'm going to begin with the numbers because it's been a very healthy set that the company has delivered in Q1 in terms of your revenue growth, your profits at about 68 crore rupees. What have been some of the key drivers and what's the outlook on your margins?
Good morning, Avan. Thank you for having us on the show this morning. Yes, like you would have read, it is the highest ever quarterly earnings that Delta has reported in terms of the revenue. It's a 338 crore revenue that we have recorded and a 68 crore profit, which also happens to be amongst the highest. And all this is backed by, a very, very strong demand in terms of people flocking to Goa, people coming to Goa, and all the other infrastructure developments that the state has seen, whether it's the new airport, the new road connectivity, etc., etc. But mind you, I would like to also say that there is a lot of contribution by the casino industry and the gaming industry in all this development at the state level.
Sure, goes without saying. Hardik, hi, morning. Let's address the elephant in the room then. What happens to your financial performance, your margins with the 28% GST now? How's business going to be impacted?
Hi, Aisha. Good morning. First of all, let me clarify one thing that, we as Delta Corp, right from 1st of July 2017 have been paying a 28% GST. So in terms of the rate, there is no change or no impact as far as the rate is concerned. Yes, there is a certain methodology that is being contemplated and is being recommended at this point of time, but it is still not yet in force, and it will take its due course in terms of whatever legalization required to be done before this can come into force. Now, let us understand what is the ask. First of all, one has to understand what is GST being levied on. Is it goods or is it service? Now, let us decipher both the things. If you consider a exchange of chips, and please mark my words, I'm saying exchange, because this, at the stage of inception, what the government is asking, there is no transaction and the goods are not being sold or are not being bought by anybody. So this is one part. So if there is no transaction, how can there be a tax on that stage? That is one. Two, even if I assume for a moment that that is a transaction, then it's by law in the act itself that if you charge GST on a sale, when the goods are returned, the GST needs to be offsetted. So that is second part. Third part, if this is not a good and if it is a service, then the incidence of service at the initial exchange has not even happened, because any person walking in and exchanging currency for chips need not necessarily use them. He may just keep it in his pocket, roam around in the casino, come back after a few hours and give the chips back to me, and that's it. So where is the service provided? The service provision only happens when a person starts using those chips and at the end of the gameplay comes back and returns the chips, where I give him back the currency that he had given to me in the initial stage. So all this, and that's where the transaction actually completes and the service provision actually gets completed. So my incidence of service gets completed then. So in either of the cases, where do you levy GST? That is one. Secondly, internationally, there are about 35 countries in the world who have been having gaming and casino industries for over 5, 6, 7 decades. And have GST implemented even before India got implemented the GST Act. All these countries have been levying a GST on a certain way. And to add to that, India, when we were in the pre-GST era regime and immediately thereafter till this confusion so sort of arose, we have been paying GST, we have been assessed for entertainment tax and commercial taxes on the very same methodology that has been prevailing world over. So as to, we don't really understand. And lastly, the amount of attention this matter has gained, and the fact that there is so much of representation, whether it is by the online gaming industry, whether it is by the industry bodies, and for the first time even the investor community has gone out and said that this seems to be slightly irrational. And more so, like I made a statement earlier, that the casino gaming industry has contributed a lot to the development of the state of Goa and to the state of Sikkim to that extent. The state governments of these states also have voiced their concerns and have said that something needs to be done and the entire thing needs to be relooked at as far as they are concerned, because a lot of contribution to their exchequer comes in from this industry.
Okay, so fair point. So let me have a follow-up question, and I'm going to address perhaps this question for our viewers who want to understand that if the law is implemented, and I'm going to take the clock back here when the stock fell, your shareholders are worried that if the law is implemented in totality, whatever we understand, and we also understand that the government right now is perhaps in no mood to relent. If this is implemented in the totality, what changes? Is this bad news? Is this really bad news? Or this is something which you can deal with?
So on the face of it, Nikunj, it is bad news because it is not practical and logical to implement what the government is asking. Having said that, you have tracked Delta and we have interacted on multiple occasions, and we as a company have been prone to hikes, whether it is on the entry tax that was being levied at Goa, the license fees that we paid, and finally the nail in the coffin, if I would say, was increasing my entertainment tax from 15%, which I was paying in the pre-GST era, going to 28%. And fortunately, the business and the industry has been so resilient that we have taken that into the stride. Having said that, this doesn't mean that this methodology or this proposal that the government wants us to implement. One, we don't know what they are intending, what is the methodology of implementation, how do they want us to implement it. I don't think the fine print is yet out. So I think, well, we will have to manage it, we will manage it, but the fact of the matter is this is not the right way to do it. And I think, like I said, with the state governments in tow, in the entire industry and the investing community in tow, I think the government is very rational. And if I was to quote the finance minister, she very clearly said that it is not the intent of the government to harm the industry. It is not the intent of the government to shut down any industry. And if that is the intent, and which I genuinely believe is the intent, I am very hopeful and confident that something positive and something amicable, mutually acceptable will emerge out of this.
Just painting a scenario here, Hardik. What if it were to be the worst case? Because, like you're saying, the finance minister categorically said that the intent is not to, pull the shutters down on the businesses. But they also said that there is going to be no rethinking on the 28% GST on online gaming. What happens in that case? How do you go about doing business then? I mean, would it be shutters down?
Let us understand from a Delta perspective. And thanks for bringing that up. And I quote in one of the interviews, I heard that the unanimous decision as far as the rate or the methodology is concerned was as far as the online gaming is concerned. So I think the offline gaming or the casino industry, there definitely didn't happen to be consensus, as it appears to be from the statements being made. On the online side, I think, again, like I said, it is very, very illogical, because on one hand, you have the MeitY, which is telling that we are a platform, these are a service, these are service providers. So even by that definition, to charge something on the face value of the bet doesn't seem to be logical. And like I heard someone else saying one day, which is the example that I have been using in the past, that if I go to a brokerage house on the stock exchange and I bought a 1 crore worth of Reliance, is the turnover of the brokerage house 1 crore? Or the brokerage that I'm going to pay on that 1 crore rupee worth of shares that I bought of Reliance? Now, that's the simple answer that the government also needs to answer. If they think that it's 1 crore, then why is the brokerage houses paying only on the brokerage that they are charging? So that is very clear. As far as the offline gaming is concerned, and for Delta's perspective, 85 to 90%, or roughly about 85-87% of our business is offline. And therefore, yes, there will be an impact from the online perspective, but I think for the larger business and the bigger chunk of our business, I think we should be good.
So Hardik, now will this lead, the next obvious question is that even when it comes to the monetization of the 550 crore rupee Delta Tech IPO, this is going to lead to delays in this. Is there any sort of a timeline? Is it going to be completely reworked? What's the game plan?
Well, Avan, we obviously have to wait and watch till clarity emerges, because while we were completely ready and we would have been able to do a lot of events and actions, but with this uncertainty looming and we don't know as to when this clarity will emerge, I think the IPO will have to wait till there is clarity, because the investing community obviously would want to have clarity before they make an investing decision.
And just to reconfirm, the online gaming business contribution to your total revenues is at about 15% and nil impact to the bottom line, correct?
Absolutely correct.
Sarthik, what changes in the interim till the time there is a yes, no in this entire decision making? I mean, let's say we are talking about what we've discussed are the numbers for the last quarter, but we are in the current quarter, which is the July quarter. What happens immediately now? I mean, business, transaction, mood, what happens to you?
So on the offline with Nikunj, there is no change. We continue doing business the way we were doing. In fact, my July traction shows a trajectory which is in line with what I have, in fact, better than what I have reported for the first quarter. And this is the quarter which for Delta has always been the best quarter, as we all know. Nothing changes till like I said, the notification, the act is brought out and it is brought into force. And till then, we have been paying the GST. We have been assessed in the past, right from 2017 till 22 and 23 as we speak. So I think it's business as usual as far as we are concerned, that we are going strong. On the online side, there are two things that have happened. In addition to the GST, obviously there are other regulation changes that have happened. So, the sector is trying to settle with that. And eventually, like I said, sanity is and will prevail. And we definitely believe that a positive solution will emerge out of the whole thing.
Happens, and really appreciate your time. So glad you could join us. I know in between meetings and you took time out to join us. Really appreciate that.
Thank you, Nikunj.
Sachin Therkar joins us now, Joint Managing Director with KPIT. The numbers were strong, and what they are guiding for, let's understand that they are maintaining a 27 to 30% at the upper end of the guidance band, and that implies a CAGR growth of 27 to 30%. So Sachin, good morning. Thank you for joining us. FY24 revenue guidance maintained at 27 to 30%, and that at the upper guidance implies a 2.3% CAGR growth over last 3 quarters. Now, some would say that while the big picture in terms of the full year is intact, there seems to be a little bit of trim down in the next 2 quarters if I purely look at the maths here.
So first of all, thanks for having me. We are very happy with the way things have turned out in Q1. They are in full in line with our expectations. And at the beginning of the year, we had said that we have strong visibility towards the first half of the year. And it looks like we are in line to have a really strong first quarter as well as the first half of the year. What we typically do as a policy, and we have done this for several years, is if there is going to be any kind of change in the guidance, that's something that we'll do only at the end of Q3. So what I can say at this point in time is things are turning out to be in line with our expectations, and we remain bullish on the business. And if there are any changes, we are going to come back and talk about those changes end of Q3.
Going through a massive structural change. There is AI, there is a crunch in terms of what the big companies are going through. What would be the implications for your business, since you are in the business of design, you're also in the business of, servicing very different type of clients, which the IT industry does per se, the impact of AI on your business?
Let's look at it in 2 ways. Impact on our business from our client perspective. In the immediate future, we don't see much of an impact. In fact, it will help us. Some of the AI thing that we've been doing with our clients for years now. So as an example, in autonomous driving, there is tremendous amount of machine learning and AI that we've been using to make autonomous driving, especially the testing and validation, far more effective and efficient. So this is something that is not new to us. And those are the areas where we'll continue to work with our clients and help them, get to the production program faster. That's something that we'll continue to do. Other than that, we don't see an immediate business impact with our clients. In terms of how we look at AI internally, that's something that we are trying to focus on. I think there are some efficiencies that can be built, especially in content creation, as well as in our recruitment campaigns and so forth. So from our perspective, this is really our take on AI in the immediate future.
I just want to get into the specifics, Sachin, of the guidance that you mentioned. Your margins, as I see it, have seen a significant improvement in the first quarter. What, apart from revenue growth, led to this? And are you then confident about a 19 to 20% margin guidance for the full year?
Yes. First of all, we want to reinforce that we are very confident about not only meeting the top line guidance, but also the EBITDA guidance that we've provided. And it's very helpful to have a strong Q1 from that perspective. And the growth, the margin improvement is on the back of 2 things. One is the quality of engagements. And secondly, we have also created some more efficiency where we had actually recruited people well in advance, and we were able to sort of, put them on different programs and so forth. So that has helped us to not only grow the revenues, but also improvement in profitability. And as far as the rest of the year is concerned, we believe that we are in strong position to be between 19 and 20%.
The other thing I also wanted to talk about was the FMS integration, because from what one understands, Q1 was also boosted by that. Could you break it up, organic as well as inorganic growth, and how the acquisition is scaled up for you?
It's difficult to break it up because FMS is something that has been part of our business for last year and a half. And the work that we have been doing has been sort of together. It's just that the full acquisition happened during the course of this quarter. So it's kind of difficult to break up, how much impact that has had. What I can say is the integration is going really well. There are two areas. One is one of our strategic clients where FMS had a really good footprint. And that has sort of helped us to accelerate our journey with that particular OEM in Europe. And secondly, there are certain things related to autonomous driving that are also complementary to our business. So far, the acquisition is going well. The integration is also well on track.
What about overall client conversation? How have they panned out in the last 4 weeks? Is it getting better or worse?
You said client conversations, right?
Yes.
Yes, of course. So we continue to work with a handful of OEMs across the three geographies, Americas, Europe, and Asia. The client conversations are, from our perspective, are all about they want to get to what you will call a case through software-defined vehicles or software-defined mobility. And the conversations is what is the most effective and efficient way to get there without compromising any safety or so those are the conversations that we continue to have. And from that perspective, they've been very engaging and enriching for us. Given their software spend continues to grow, especially in this area, we have not seen any kind of we are not getting any kind of sort of messages from any of our clients that things are likely to slow down from the software perspective.
Sachin, really appreciate your time and so glad you could join us. Well, let's look at the numbers scorecard today. Which are the companies which are due to declare numbers today? Tata Consumer right up there, 1% higher, 1.5% higher. Then you've got Bajaj Finance, which will come out with numbers today. Dr. Reddy will come out with numbers today. Cipla will come out numbers today. Expectations are really very varied when it comes to the entire pharma space. You got Loris right up there. You got Dr. Reddy, Sun Pharma. Every pharma company has a different path of business models. You just cannot compare. But somewhere I would say Bajaj Finance numbers are going to be critically important, given that what they've indicated in terms of an AUM growth for the quarter gone by. I mean, when they came out with their AUM growth, the numbers were fantastic. The stock market reaction was charged up. 6-7%, I think it went higher the very next morning. So now markets know some fine print. Now it's going to be spreads and now it's going to be the cost of liabilities. So half the picture is already out. Interval tak pata hai. Now you would just want some kind of a good happy ending in terms of the Bajaj Auto numbers. I mean, I really hope it's a Hindi movie, that endings are happy. But you know the movie till the interval. The plot is out that what they will deliver for the quarter gone by.
Let's hope they live happily ever after when it comes to Bajaj Finance. There's Axis Bank as well, which is due to report its numbers today. That's also going to be important from the market positioning, considering I think this is going to be the last of the large private banking names which is going to be delivering its numbers. And we are expecting the margins to be a little bit under pressure, elevated cost ratios. That's going to perhaps weigh in on the margins. And given the commentary that we've seen from most of the large private banking names, that the NIMs are peaking out in the near term, let's see what we hear from Axis Bank as well. But here's Ajay Srivastav from Dimensions Corporate Financial Services. He believes that while fashion retail is the most overrated sector right now, paper is pretty much just the opposite.
I think the most overrated sector too is retailing, certainly by any chance. Retailing, fashion wear retailing, most overrated sector. General retailing, most overrated sector. You saw the Reliance results. You've seen Trent. You've seen, Avenue you just spoke about. Just see their performances versus what the market valuations are. I think the most overrated sector, in my view, at this point of time, among all the sectors that I see in India. And I think if you were to look at what is really the underrated sector, nobody buys it. I do not know why. Paper. P's of 3 and 5. Incredible, even after this expansion, highly profitable companies, 3 or 4 companies run this whole market in India, and the P's are less than 5. I have not seen this. I do not know why it is so. And it has continued for year after year. It's not like it's a one-time phenomenon. I have no clue. I'm sorry to say why it is happening there, but you ask me what's the most underrated sectors, paper, PE of less than 5, highly profitable, duopoly, literally, no competition, necessary of life, but still the PE is 5. Such as market, fashion retailing gets PE of 120, essential profitable business of paper gets a PE of 5. That's market, my friend. We are very bullish on power generation. India is going to be great. Consumption will go up. Market pricing will become free. Nothing happened at the end of the day. The companies are sluggish. They are non-performers. ITC stock, you can take it. Compared to what the market is, it's a dog, absolute dog, and it doesn't go for them. Whether it's Tata Power, Adani Power, you just name the power companies. So generation companies and an election year, unlikely for them to get any relief in terms of passing on tariff to the consumer, etc., etc. So I think power generation companies, I think, should be left alone at this point of time. I don't know what is the trigger for them at this point. Highest interest rate, generation requirement is, power requirement is much lower in the economy at this point of time. Government is not going to let you pass through so much of it. So I don't know, is there a trigger for them? I doubt it. I think we burnt our hands of very poor returns or maybe negative returns on some of them, and we won't touch it again for next at least 2 years till the elections are over. Now come back to the point, we talk of polycap, etc. I think these are specific stock stories. These are not industry stories, because I think he's built up the portfolio on exports more than domestic. So I think, there was a strategic compulsion in the company to go beyond domestic, and it's paid off very well. So, it's not an industry symptomatic. It's a very company-driven strategy which came out well. I'm not sure it will come across all the companies in the industry, but certainly to extent that degrowth that we see in most companies, that won't happen. Whether you need to buy at these prices, valuation, I would doubt very much.
Okay, and with the markets doing what they are near the life highs, ACE investors have also been rejigging their portfolios. What are they buying? What are they selling? Sharad is here to walk us through 2 of the smart portfolios.
Well, yes, important changes coming in for the month of June when it comes to the shareholding pattern. And the first ACE investor we have taken is Ashish Dhawan. And over here, new entry coming in, and that is Religer Enterprises, with his stake coming in almost 1.66%. Now, the company itself is going through a turnaround stage, and also the street is expecting that the NCLT proceedings, which are coming, especially on the debt front for its arm, Religer Finvest, that gets sorted. Now, because of that, it's a re-rating case as well. Apart from this, exits coming in, and this is coming in full complete exit, or his stake has gone below the 1% mark, and there are 2 names coming from the IT space. We are having Birlasoft as well as Zensar Tech. And do remember, there has been a rally coming in the small cap and the mid cap IT space as well. And the main thing is the commentary and also the non-US marks and how they are actually expanding in the IT space. Now, apart from this, Porinju Veliat's entire stock portfolio, if you see for the month of June itself, a new entries coming in 2 companies. The first one being Kokyo Camlin and the second being Centum Electronics. And of course, Kokyo Camlin itself is a play on the national education policy and also is dealing with the stationaries and the apparatus which is related to the education. Apart from this, even the Centum Electronics, he is having almost 1% odd stake. Apart from this, no major key exits coming in Porinju Veliat's portfolio, but there is one company, the small cap space, which is Orium PropTech, where he has actually significantly increased his stake by almost 136 basis points, coming in at almost 3.4%.
All right, interesting deals. Interesting times also for the entire hospitality industry. Kaminder Singh joins us, Managing Director and CEO with Mahindra Holiday Resorts Limited. Mr. Singh, good morning. Thank you for joining us. Haven't interacted with in a while, so always good to connect with you. Prima facie, let's understand things for the quarter gone by. I don't want to dwell too much into your bottom line buy, because we understand that there is always this element of you have to keep on parking money because of the accounting policy you follow. So I'll not spend too much time on that. But let's first understand the big picture. This is boom time for the hospitality industry. Are you enjoying the joyride?
So I think this is something that I wanted to share with your viewers, that we have a strategic objective which we are pursuing now, from growing our room base of about 5,000. As you know, this quarter we touched 5,000 mark. We want to take it to 10,000 over the next 7 years. That's the big picture. So the joyride is on, and we will definitely move towards our strategic objective of doubling our room count in about 7 years. Having said that, even at a financial metrics level on standalone, this quarter turned out to be the best ever quarter for us in terms of the income, which grew by about 17% at about 355 crores if you exclude the one-offs, as well as the EBITDA, which crossed 100 crores mark, which grew by about 19%, and as well as the PBT, which was up by 19%. Also, our member additions were very robust at 23% growth on YOY basis. And parallelly, we acquired a resort in Jaipur, a 72-key resort, which will expand further. And we also broke ground on a 236-room resort in Ganpati Phule. And we have 800 crores of capex already in play, and we are moving towards our strategic objective of doubling our room count.
Now let's understand that if I look at the revenue, 614 crore versus 600 crore. At a time when you're using the word joyride and occupancy levels are high, and almost all hotels and resorts are blazing, are reporting strong levels of occupancy, the top line is flat.
All right. So what I was explaining earlier was the standalone results of Indian operations. And that is where the top line is about 17% growth on YOY basis. On a consolidated basis, you are right, we are flat. And that is largely because we have Holiday Club Resorts, which is the Scandinavia-based company, Finland-based company, where because of the fact that we have high inflation there, Euribor is at about 4.2%. Having said that, despite that, the timeshare sales there was good because people, Finns love to buy second homes. They can't afford second homes. They're buying timeshare. But in the spa hotels, the occupancies were low. It is seasonally weak quarter. Plus, the consumer sentiment in Finland is low right now. As you know, Finland is in a technical recession. Their GDP turned negative in the last 2 quarters. So the effect is something that you see in the consolidated results. But what I was passing through was the standalone results, which is where I was mentioning that we had the highest ever performance, and a 90% occupancy on a 5,000 room base is something that we were extremely happy about.
1,000 number, when does that become 10,000? Since you referred to it, you said very soon. Define very soon for us.
So we are looking at a 7-year period, 2030. In 7-year period, what we did in the last 26 years, we came to 5,000 rooms. We want to now achieve that in 7 years now to make it 10,000.
How is it that you sort of make hay while the sun shines? And it seems like the sun is going to shine for the next 7 years, like you just highlighted. What is the capacity expansion that you're looking at? Any new resort additions? How is it that you actually, grow your member additions?
Yeah. So there are 2 questions in one. How do you grow your inventory? How do you grow your members? And these are the most important metrics for us. You can see already that we are now at about 286,000 member base. We would like to grow this member base in line with our room additions. And room additions typically have been robust. In the last 3 years, we added about 1,200 rooms. We are accelerating that by investing into our own resorts as well as acquiring. And of course, the leasing always remains an option subject to meeting our standards. So just to give you a heads up, we have at this point of time a 200 crores capital investment program going on in our existing resort in Kandaghat, which will become now after the expansion will become a 230-key resort, bringing in economies of scale. And I also talked about 250 crores investment in Ganpati Phule, which is again going to be a scaled up resort, which will really help us to take economies of scale. And of course, people going to Goa would stop at Ganpati Phule. And of course, as we speak, the Goa resort is being expanded by 50 rooms. It's already a 200-room resort. It will become a 250-room resort. We have Puducherry. We have a resort of 125 rooms. This will become about 190 rooms. We are expanding that as well. And we are putting up, we are breaking the ground as we speak in Theog. We are going to, which is in Himachal, we'll put another 150 crores there, 150 rooms there. So as I see, about 800 to 850 crores of investment is already at play, which is in line with the strategic objective that I outlined earlier of making our total room inventory count go from 5,000 to 10,000 keys in 7 years' time. And as far as member additions go, which was your second question, we grew our member base by about 23% on a YOY basis. If I were to take it compared to the same period last year, we launched a new 4-year product this quarter, which is getting good response. Last year, we launched 15-year product. We have increased prices in April, May, June. So we are looking at member additions with lots of confidence, because as we now embark on a path of expanding our inventory, we are very, very confident that members will come and keep filling our resorts, as you can see from the 90% occupancy that we got in April, May, June, the quarter that we finished just now.
Kavinder, on a not lighter but serious note, you should be looking at cashing in on the World Cup opportunity. I mean, reports are indicating that capacity is already full in Ahmedabad for the World Cup, and people are even booking hospital beds from what we understand.
Yeah. So our business model, as you know, is focused on members and first come, first serve. So we really don't sell our rooms to make money during the World Cup. So we won't get any kicker as a result of that. But the good part is that our resorts are already looking full, whether in Ahmedabad or whether in Dharamsala or wherever the matches are being done.
And Mr. Singh, hi, morning. Avan joining in. You have, I think, seen pretty healthy occupancy growth, around 90%, if I'm not mistaken. What is it at, and what levels look sustainable?
So 90% occupancy on a base of 5,000 rooms in April, May, June is a dream come true. We also reached highest ever resort income, which grew by about 10% in this quarter over the same period last year. July looks a little muted, as you know, because of the heavy rains, but still we are looking at 78 to 80%. This period is generally lower, but what we also note is that while April, May, June is a low season quarter in Finland, but July, August, September is a high season quarter there. So while we have a bit of a low season quarter here, but we will have a high season quarter in the holiday club resorts. So that is something that we are looking forward to, because the peak holidaying season in Finland has already started.
Okay, thanks so much for taking time out and joining in and giving us a little bit more clarity on the financials. No doubt it has been a bit of a soft quarter for Mahindra Holidays, and that stock is under a bit of pressure. We'll take a very quick break right here on the show. Be right back as get you Chartbusters and review a whole host of earnings.